All right, we need to have a serious chat about your money, specifically about the Naira sitting in your bank account, and the fact that it's silently being stolen from you every single day.
So let me just ask you this straight up. If you worked your tail off, you were disciplined, you saved up 1 million Naira last year, is it really still worth 1 million Naira today? In terms of what you can actually go out and buy with it? The answer, and it pains me to say it, is a hard no. You see, inflation, it doesn't send you a debit alert. It just quietly, sneakily eats away at the value of your money.
What's going on, finance people? It's Josh here. Welcome back to JoshLM Finance. Let's break this down. But first, just the usual quick heads up. This isn't financial advice. I'm sharing my research and my own journey to help you make smarter, more informed decisions.
Cool.
All right, let's get into it.
So first things first, we have to properly understand the problem we're up against. This isn't some, abstract economic headline. This is something that is actively happening to your hard-earned cash right now.
Just take a look at these numbers. The official inflation rate in Nigeria has been bouncing around, let's call it 14%. Now, what's your bank paying you on your savings account? If you're lucky, maybe 5%. Maybe. Do you see that massive gap? That's not a gap, my friends. That is a canyon. And every single year, your money is falling deeper into it.
So you do the simple math, and you realize you are losing about 9% of your money's buying power every single year. You're getting poorer, even while the number in your bank account is staying the same or maybe inching up a tiny bit. It's a tough pill to swallow.
Honestly, leaving your savings in a standard bank account right now, it's exactly like pouring water into a bucket that has a hole in the bottom. You keep topping it up, you feel like you're doing the right thing, but you're constantly losing value. It's a game you literally cannot win. And this whole leaking bucket situation, it brings us to the next very important point. The default option, the place we all start with our money, your regular bank savings account, is fundamentally broken in this kind of high inflation environment. It's just not fit for purpose anymore.
So we have to make a huge mindset shift. We have to stop thinking just about saving and start thinking about yield. Now, yield sounds like some complicated finance term, but it's not. It's just the return you get on your money. It's how you make your money work for you instead of the other way around. This concept, this is the absolute key to getting ahead. Okay, theory is great, but what do we actually do about it? Let's start with the very first step, the easy wins. The low-risk, smarter ways to save your Naira that actually fight back.
Okay, so on one side, you've got your traditional bank, giving you that sad 5%. On the other, you've got high-yield fintech platforms, think PiggyVest, Cowrywise, and they are offering something like 12 to 15%. Now look, are you crushing inflation at 15%? Not quite. But it's the difference between jogging backwards at the bank and walking forward at a pretty brisk pace. It's a massive upgrade.
Now let's level up again to money market funds. These sound way more complicated than they are. All they do is pool people's money to invest in super safe short-term stuff, like Treasury bills, which is basically you just lending money to the government for a little while. And right now, the yields on these are in the range of 16 to 22%. Now we're talking. Now you're actually in inflation-beating territory.
There's this quote I love because it's just so true. For your emergency fund, that 3 to 6 months of living expenses, leaving it in a regular savings account is a rookie mistake. A money market fund, that is where grown-ups keep their emergency cash. It's safe, it's accessible, and it's not silently getting weaker every day.
All right, so once you've plugged the leak in your savings bucket, it's time to go on offense. It's time to talk about investing. This is where we stop just protecting our money and start seriously growing our wealth over the long term.
So, what are the main tools in our toolbox? Well, you've got Nigerian Treasury bills, or NTBs, super low risk because they're backed by the government, and they're yielding around 15 to 18%. Solid. Then you have FGI and bonds, which are similar, just for longer periods of time, with maybe slightly higher yields. And then you've got stocks. With stocks, the potential for returns is way higher. We're talking 25, 30%, even more. But, and this is a big but, the risk is also much higher.
And I really have to be crystal clear on this point. Stocks are volatile. That's just their nature. The value will go up, and it will go down. So this is not where you put your emergency fund. This isn't for money you need next year for rent. This is for your long-term growth goals with money you can afford to leave untouched for years.
Okay, I know that's a lot of information. MMFs, T-bills, bonds, stocks. So how do we actually pull this all together into a simple plan that you can actually follow? Let's build a basic strategy right now.
You know, a really sensible place to start is with some balance. For example, maybe you keep the bulk of your portfolio, say 70%, in those high-yield Naira instruments we talked about, the MMFs and T-bills, to actively beat inflation. And then you could keep the other 30% in some dollar assets, just for stability and to protect against Naira devaluation. It's about being strategic, not emotional.
Let's make this super practical. Let's say you're saving 50,000 Naira every month. Good job. If you put that in the bank, we know what happens. It slowly loses its power. If you put it into a money market fund yielding, say, 18%, you're pretty much preserving your purchasing power. You're treading water. But if you start putting that into T-bills or bonds, you actually start to grow your real wealth. Same 50K, same effort. Totally different outcome.
And look, if you only take one single thing away from this entire explainer, please let it be this. This isn't about getting rich quick. It's not about gambling on some meme coin. It's about consistency and smart choices. Slow money done right will beat fast money done wrong. Every single time.
So if this has been helpful, if it's kind of clearing things up for you, do me a quick favor and just tap that like button. It honestly helps the channel out in a huge way and gets this information in front of more people who need to see it.
And I am genuinely curious to know, after hearing all this, where are you currently keeping your savings? Is it in a bank, a fintech app? Are you already using a money market fund? Drop a comment below and let me know. I really do try to read all of them.
Thanks for watching till the end. If this helped you, you know what to do. I'll see you in the next one. Take care. Peace.